Hi, everyone. This is Daniela Cambone for StansberryInvestor.com. And before I bring you today's interview, I just want to share with you a report we have just put out that I highly urge you check out, because with most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone, it's especially a good read at this moment in time. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to wakeupcall2021.com. Again, that's wakeupcall2021.com. That said, let's get to today's interview. We have a lot to break down here because we are talking China Evergrande Group, which is the world's most indebted property developer whose financial issues are quickly becoming everyone else's problems. The group has a debt due that it can't pay, and its looming failure, whether that be a restructuring or total liquidation, threatens to cause a credit crunch and rock confidence in Chinese investments. So how does this affect you and your portfolio? Could it? Joining me today is Vince Lanci, founder of Echo Bay Partners and a frequent contributor to Zero Hedge. Vince, welcome back to StansberryInvestor.com.
Thanks for having me, Danny. Good to see you again.
All right. So first and foremost, Evergrande, the news is circulating everywhere. Why should we care? Is this a domino effect that will spill over here in the U.S.?
Well, we talked about this beforehand. It reminds us of a U.S. bank that went under some years ago.
Lehman.
That's right.
So perhaps the better question for you, Vince, is this China's Lehman moment?
Yes, it is. It is. Without getting too into Lehman, this is the default that has to happen in China, in my opinion, that will, over time, it's not going to happen in one day, default slowly so they can reallocate resources and show the world that they're serious. It's also an excuse to print more money. Yeah, it's going to happen.
So wait, is the Chinese government not going to step in here and save the day? How does this play out?
Okay, well, I mean, it plays out that I think a good phrase for this is like a controlled. It's like you know how you collapse a building when you want it to when you want to take it down. This is one of those things, a controlled demolition, right? I believe, right, based on information and observation, that they've been familiar with this for some time. Now, not being paranoid about it, and it has to happen, and they want to take it down so that it doesn't spread to other companies or industries and like other stock markets and what have you. So I think they have to take it down and then rescue it. That's what I think they have to do. I think that's what's going to happen. They're probably doing it as we speak.
But do you think this will cause a domino effect that we'll see other companies follow suit in China?
Yeah, the word that they kept out of the headlines for the last week, but now it's today and yesterday it started coming into the headlines, is contagion. And there is okay. Why don't I say what I think the Chinese government is betting on, and then what the real risk is? Is that okay?
Absolutely.
I mean, it'll be easier that way, right? I think the Chinese leadership wants this to be a controlled takedown. Take it down, let it default, make the investors whole, kind of like with the GMAC financing years ago. Help the investors out, lend them money, and then use the real estate as collateral. And then they can reallocate resources. So in that sense, it's really not really contagious because they don't deal in dollars. They deal in yuan, renminbi, and they don't pay their creditors in dollars. So it's not an outside of China contagion thing. But that said, that's the math. Markets don't listen to math. They only listen to fear. And I think, today and Friday and yesterday, these markets are discounting, rationally or not, they're discounting fear of real contagion, kind of like Deutsche Bank and Lehman Brothers.
Okay, and that said, we are seeing the impact it's having on markets, on the S&P, on Bitcoin, on gold. What's happening here? Which asset will suffer most here?
That's a hard answer. Up until now, other than I think in terms of the equity space, you'll see other developers, and we should actually talk about what they do. People don't even know what they do. Other developers will suffer, and then there could be a chain event of other companies in China suffering. This would be a financial storm for them. Outside of the Chinese stock market, you're going to have credit spreads are going to widen. People are not going to want to lend money. It's a deflationary event. They characterize it as a liquidity event. We don't have liquidity, but a liquidity event is when you need to get the money, and you can get it. A solvency event is when you can't get the money. So the next market that it would affect would be commodities. Commodities would be taken down, as they have been, and they're continuing to be taken down, especially on the back of the US taper thing. The third market that was surprisingly strong every day going into Evergrande until very recently, like today and yesterday, and probably tomorrow, is crypto. Crypto was relentlessly strong, and people were saying Evergrande, they have commercial paper, it's in Tether, it's going to take Bitcoin down. Well, that's not going to happen, and I can tell you that pretty confidently. But that said, when the big news first came out on Evergrande, Bitcoin finally went from up to down. So it feels like everything is doing the whole old, remember Brexit? It's doing the whole risk off thing. Whether it's a real risk or not, everybody's taking their money out of stuff that's leveraged.
Vince, and I think the context in which this is unfolding is interesting. We have the looming debt ceiling. We have the Fed. We don't know the direction they're going to be taking yet. Will they be more hawkish? Who knows in the future? So coupled in this environment, I just want to bring it back home to the U.S. And Canadian investor. How will this impact us directly? Will it?
I think I rarely like to make trading ideas or recommendations, so I'll probably be wrong for saying this, but it feels to me like the U.S. markets are behaving like it's going to be a contagious issue.
Right.
Now, I don't think it will be contagious. I could be wrong, but the U.S. market. So people that are saying it's not going to be contagious are saying buy the dip, and I want to do that, but the taper is still out there, and the stimulus being withdrawn is still out there, and the economic slowdown is still out there, and God forbid another COVID thing happens. So I think if Evergrande becomes contagious, that's going to hurt us, and if Evergrande doesn't become contagious, then the taper will be in full effect.
Gotcha.
So I want to buy the dip, but I'm not.
Okay, so that said, you just played out two scenarios. Which one is more likely to happen in your opinion?
Well, I think the last 3 days, the Evergrande has been weighing on the market, and then the optimists are like, okay, well, Evergrande's weighing on the market, and the news that keeps coming out every day, it's going to make the Fed change their mind on tapering. Yeah, it probably would do that. It would probably back off on tapering, but as long as the contagion is contained, for lack of a better word, the Fed's going to taper. I almost feel like you want to buy the dip, and you don't want to go home on the weekend long the market. I feel like the U.S. stock markets will have to take on some water, but they will not suffer like China has suffered at all.
All right. Well said. Vince Lanci of Echo Bay Partners and contributor to Zero Hedge. Thank you for joining me here on StansberryInvestor.com for that.
Thanks for having me.
And thank you for watching. We'll have much more coming your way. In the meantime, sign up for premier content at DanielaCambone.com. That's it for me. Thanks for watching.